The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-924-6648, and I'll be happy to answer them for you if I can. I'm going to start the show today about patterns that fail, and I'm going to focus on J.C. Penney. I put a weekly chart into the Tiger TV to let you folks see it. It used to be a really nice number up around the $87 per share level during the top of October of 2007, and then we came back and we broke all the way down to $14 a share. We rallied up to the 382 during 2012. We went to the exact 382 at 42, and now we're trading at $9, and that makes a very, very negative pattern. If you do have any questions, it's 877-927-6648 if you have any questions about what we're talking about today. I wanted to focus on JCPenney because when patterns fail, that tells us a lot. This pattern in JCPenney reminds me a great deal of the pattern in Lehman Brothers that we had during the move down in 2007 and 2008. Lehman Brothers at around $16 or $17 a share formed the same type of pattern. And, I knew that, and it had come down very hard, of course, because it was eventually going to zero. But at that area of around $16 or $17 a share in Lehman Brothers was very, very critical. And what happened was it was the next day that some announcement came out and the market gapped down about a half a dollar and, went to zero. So we've had a situation in JCPenney's that is very unusual because on last Thursday, the stock had completed a perfect 1.618 at $9.40 a share, and it rallied and closed up on the day on that Thursday. But Thursday night, the executives of JCPenney decided to dilute the stock by 30%. They went to Goldman Sachs and say, we want to issue 84 million shares of new stock, which dilutes the the current stockholders by a little over 30%. And this is what I don't understand. Goldman Sachs is a very astute organization, I think, and some people at JCPenney must be pretty smart too. Why couldn't they go to the junk bond market and borrow money at the junk bond market? My God, rates are really dirt cheap, and this is an old established company, over 115 years old. It certainly still has some type of a credit rating. Why would they go in and dilute the stock? Well, if you stop and think, maybe the answer lies, and we don't know this answer if it's correct or not, but maybe the credit is really drying up for them if they couldn't really get it. And the only place they can get that $890 million is through the issuing of the stock. Now, if the stock turns around and goes up, it'll be okay, but the original stockholders are really holding the bag here to the tune of about little over 30% of the amount that they were looking at. The reason why this pattern is so important is because we were looking at the weekly chart, and if we go to the daily chart, you're going to see something that is just really amazing, and that is we've had this reverse wave pattern that we've seen quite a bit, and I wanted to point this out to you folks if you get into Tiger TV. On that Thursday, we had a record volume day of 128 million shares. Well, folks, that was nothing compared to what happened Friday after that news came out. The volume on that day was 10 times normal volume. And the market, of course, gapped down, and again, it gapped down again today. And it looks, very, very bad. The only way this stock could ever regain any of its momentum now would be to close above, $10 a share sometime in the next few days or week, and not take out the low of $8.59 a share. I originally bought some of this stock on that Thursday for my grandson. I had a dollar stop on it that almost got hit today, but within about 9 cents. and I'm very, very nervous about it. Well, not really nervous because I have a stop in, but I really thought that it had a chance. But when they dilute the stock like that, that's very unusual, and it's a very bad sign. There's not much you can do about it because, they don't announce it until they've already made their decision. But that's the problem that we have. So my stop is in on this. If we get to 850. Actually 8.49 in the price of J.C. Penney's, I would get out of this. That's for our new grandson. My first grandson was born in 2000, and Big Steel, U.S. Steel was making a major bottom, and I bought stock for him that turned out to be a very, very good investment for him. So we've since out of it, of course, but it worked out very well for him. So this is what I did with J.C. Penney. It just didn't work. This is one of those times with these patterns, it just didn't work, and you just got to stand aside. I'm still in it, but frankly, my chances of winning in this is quite remote in my opinion. Now, we do have a situation. We had a grain stocks report came out just about 10 minutes ago, and it was it was very negative to beans, slightly negative to corn. But corn, after being down about 5 or 6 cents, came screaming back and held up, incredibly well from where it was trading pre-report. So it's still got a chance, to move up in that market. Now, I wanted to focus on one other market that I think is we all watch, and it's one of our favorites, and that is the gold market. We had some tremendous moves in gold last night. It was really quite amazing. If I can just get this chart fixed up the way that I want it, I'll be in great shape, and then I'll be able to share it with you folks, because it's really a really nice chart, because, boy, we hit some really key levels on both sides of the market last night, especially on the upside when the first news came out that, the government was not going to it was not going to fail. It's just to not be able to pay their bills right away. And, basically what happened was the gold went all the way up to the 1353 level, which was the 61% retracement coming off the high up at 1374. Well, that's just a series of lower highs, of course. And then the market dropped, well over, $35 per ounce and came down to the 1322 level, which was the 61% retracement of the low way back on September the 24th. And it was also the 786 retracement of the low 3 days ago. So there's very strong support at that level. So as long as we can keep gold above 16, let me get this right, these S&P, they get me confused. As long as we can keep the gold above 1323, we should be in pretty good shape for a move higher. But if we go below the 1323 level, that's going to set up much lower prices, probably down into the 1240 level if per ounce in gold if we get to that spot. A lot of rhetoric is going on about what's happening to all these markets, and believe me, everybody has an opinion, and they're entitled to that. But frankly, that's what they are, opinions. We don't know which ones are going to work and which ones are not going to work. All we know is that those are opinions. I think that the key to all of the things that we're watching here could lie in the foreign currency markets, and so I'm keeping a very close eye out on the U.S. dollar index, because we are looking at a situation where we have if I can just get this, hold on one second, folks, I'm trying to walk and chew gum at the same time. Yeah, there we go. And I posted a chart into Tiger TV showing the last 18 months of the U.S. dollar index, and the fact that we have completed a 5-point reverse wave pattern down here at this 80 level in the dollar index. We're trading at around 80.25 right now. As long as we can hold above 80, I think we have a chance, because 80 is a perfect 786 retracement coming off of the low from September the 17th of last year, 2012, and that's where we're setting right now, is we're setting right at that spot. So this is either a beautiful 5-wave reversal pattern, or it is a pattern that's going to take the dollar index into new lows, and that means that they're just going to let the dollar float. What that'll do to inflation, I'm not quite sure, but that's the main thing. Someone pointed out that the gold pattern on that half-hour chart that I put up also completed a really nice 135 pattern where you have these higher bottoms. Point 1 is the first bottom, point 3 is a higher bottom, and then point 5 is a higher bottom, and that came in at the $13.23 per ounce level in gold, and it held up really well. Another reason why I wanted to focus on the JCPenney when we started the show is that one of my idols in this business of mine was Amos Hofstadter, who was one of the founders of Commodity Corporation in Princeton, New Jersey, probably one of the greatest traders that ever lived. And he had a little plaque on his desk, and the little plaque said, "Has your position on has your opinion on your position changed? Yes or no?" And the second question was, has your price objective been met? Yes or no? And the next question was, if you can answer yes to either one of these questions, you can liquidate your position. But if you can't answer yes to either one of those positions or questions, you're not able to take your position off. And he lived by that. So he was able to set through, really strong reactions in certain things because he was looking at the big picture and held things for weeks and weeks and months, and sometimes, he would hold them for, several years. And this is the same type of, it takes a different type of a trader to do that because, he's looking at something on a basis that goes back on weekly and monthly charts, and he's willing to stand in front of it with a tremendous amount of risk because he believes very strongly in his convictions. When he's wrong, he takes his hits and he goes on to the next one, but when he's right, he makes a great deal of money. Well, he only traded probably 10 times a year, and he was right a lot more than he was wrong, and he made a great deal of money. Unfortunately, we lost him in January of 1977, but he left a legacy with all the people that were at Commodity Corporation, that became market wizards and things. It was just really an amazing thing. That someone asked a question if he was a billionaire. No, he was not, but his son. His son was named Buddy. That was his nickname. But Buddy Hofstadter was one of the original people in cable TV and satellite, not satellite, but these discs for cell phones, putting up cell phone towers and stuff. But he made his money in cable. And I don't remember the name of the company, but they sold it for $3 billion. When I wrote the book about Amos, I went to visit Amos's daughter, Janet, down in North Carolina, and she showed me pictures of the family and everything. And Amos's grandson is, I think he's a senior at Harvard. No, he's graduated now. I don't know if he went into the finance part of it, but I know he was thinking about it at the time. But the bulk of the money that Amos left was when his son was starting the business. Amos believed very strongly in what Buddy was doing, and so he gave a lot of money to him. But he got stock in return, and that made him very, very wealthy. Okay, that's it. We're going to take a little break here. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I'm going to switch back to the currency markets again because I believe that's where we're going to see some real excitement. Not that we're not having it in the stock market finally, but we always see it in the Forex markets. I posted the chart for the euro on the daily basis, and as you can see, it has some very nice timing things that come in. Last week, we have not taken out the highs of last week. We have done that in the pound, but we have not done that in the euro as yet. And the euro is 53% of the U.S. dollar index. So all we really need to do is to see the euro get below the 134.40 level, about 80 pips from where it is right now, and then I believe you'll start to see some fireworks to the downside in the euro, and that would mean that dollar index 5-wave reverse point pattern is going to work. But the key level to watch in that dollar index is just below 80, because if we go below that, that's going to be a very negative sign, because you'll be closing below the 786 retracement, for the first time in a very long time, and that would be very negative. Remember from all the president's men, when they were talking about the Watergate scandal, was to follow the money. And that's what you have to do is when you're watching, the stocks and foreign exchange, because the foreign exchange is where the money moves. And anytime someone buys something overseas, for manufacturing, they have to convert it back into their currency in order to, be paid. And so that's why these markets are so very, very volatile. And, they move around so much that it gives you a great deal of, opportunities to come into these markets. Now, in the overall trend of the market, if we just take a look long term, you'll see that the euro has been in a very, very bearish market since we hit the 160 level way back in 2008 after the market topped. We've had a series of 1, 2, 3, 4, lower highs, and we are, testing the old highs from 2013 up at the 137 level. And if we get above that, then you could see a move all the way to 139 or 140 in the euro if that event happens. But that has to happen before, it's got to get above the 136 level, of course, before it can get to 139, 140. But it's still bearish. You've just completed another ABCD pattern like we showed on the daily chart. The weekly chart just shows that it's it's been very bearish for a great deal of time, and it's had a pretty good rally since it bottomed in July of 2012. And we made a secondary bottom in July of 2013. So cyclically, we are ready, to see a pretty good correction in the currencies. That doesn't mean we're going to get it. It just means that we're ready to get it. And there's a big difference between the two. That's for sure. I wanted to bring up one other thing on the currencies, and that is the pattern that we have in the British pound, because it is such a classical pattern of the 5-point reverse wave. And we went up and we touched 0.5 again. We took out the highs following the FOMC meeting by just a little bit. I think about 10 or 15 pips, where we made a 1.27 expansion. And so this is a really key pattern that we're looking at in the British pound. This is the one that you really would like to see. If you'll take a look at this chart when you get a chance and go back to look into January of 2012, you'll see that when the market made a new high in early January, it made a marginal new high, and then that's from where the market broke and went down a great deal. So this is a really classical 5-wave reverse pattern in the British pound. It's about as perfect as you're going to find. Each of the waves is lower than the previous wave or higher, depending upon whether it's going up or down, and it is usually a exhaustion wave. And if it tells us the story like we're looking at right now, is that we're not going to see the British pound above 163, anytime soon, but we will have to wait to see if this is going to be the case. But this is the currency markets, what we're looking at now. The key to this euro and the pound and the Japanese yen, it relies on what's happening with that dollar index, and that dollar index is trading around 80.28. And as I mentioned before, if we go below 80 in that, if we go below like 79.80, 79.90, that's going to be something very, very negative, in my opinion, unless the market would reverse at that point, which, sometimes it breaks the support and turns, but, these numbers are very, very positive for, foreign exchanges to turn. And I've been looking for a turn for a week or so, but it hasn't happened yet. Okay, we're going to take another break, folks. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position. Subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global as a core position for 6 months. A current position entered as a turnaround company is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I had a request to put a chart of the daily gold into Tiger TV, which I've done, and it basically shows the pattern that we've been watching since May when we made the big ABCD up at the 1475 level, and now we've come down. We've tested the 61% retracement at the 1170 level. Then we went up and we made an ABCD pattern at 1435, and where we set right now is very critical, because if we go below the 1323 per ounce in gold, that was the low of the day, I believe we're going to be heading down about $100 an ounce to the level of 1239. That would be my next guess, or let's don't call it a guess. Well, it is a guess, but it would be my prediction. That's what we'd be looking at. There'll be some key support at 1300, of course, because that was the low of last week. But frankly, the way the market's acted, it opened up at the 61% retracement and then gave $30 of it back. So it's very critical that it holds the 1623 level. It's 1323 level. I'm going to have to write these down. By the way, it's these markets overnight were really unbelievable. The swings that we had, in some of these things. So I ended up not getting a whole lot of sleep, but I did a lot of trading. I finally figured out why I don't sleep too much, and that is I like trading better than I like sleeping. I think that's the bottom line. And so I just live with it, and that's the way it goes. I'll be finished, very early today, but last night was a very, very interesting night, given the fact that we had all these things, occurring at one time, and it was, really quite exciting. I'm trying to get the chart for the Treasury bonds up, or Treasury notes. I'll probably do the Treasury note chart first. And then I will, if I can just get it one more time, give me 1 second, and I'll see if I can get the chart up. And if I can't, I can't do it. I'll do crude oil first, and then I'll move on to the. I want to get onto the bonds because I think the bonds are, very critical. Where we're standing in the market right now as crude oil. Crude oil broke below the 50% retracement of the low we made in August. That was a relatively negative sign because, we stayed there for 3 days. And then with the news, the market has broken. It got down to about 101.40. We've had a very small bounce from that level, but it tells us that crude oil is looking to come down somewhere around the 96 level. That would be where all those old highs were, and that would be a 61% retracement of that previous move. So my price objective on the crude oil comes in at around the 96 level, which will probably take a few days to get there because crude, if it wants to, can get there today because, it's $6-7, and that market has a tendency that if it wants to move in that direction, it can certainly, do it very, very easy without any type of a problem at all. The VIX index, I have to talk about that because it's held up incredibly well during this thing. I mean, it hasn't broken down. Let's put it that way. But on the other part of the coin, the VIX index has not really gone very high to the upside. It's had a heck of a move today. But if you'll give me a second, I have to refresh my charts because the computers went out last night. Of course, I don't know it was from overuse or what, but they certainly really had a heck of a move. If you hold on a second here, I will get this this chart on the VIX index. We've been quite bullish on this for quite some time, and we finally have got a nice move going. I don't know if these prices are correct or not, but I'm hopeful to get this thing refreshed. Wow, it did gap up quite a bit, so we'll see if it's going to be a the start of a move, because we really think that the VIX index is going to go to 20, and right now we're at about 16. We haven't taken out the highs of August yet, but we're getting very, very close. So at least there's a little bit of fear coming into the market, not a great deal, but some. That's that's the bottom line. Today is a big gap day, and gaps are usually filled in this thing. So we'll see if it is going to have a follow through, after, 1 day or not. We will have to, wait and see if the market does it. And I want to get to the Treasury bonds here because I really believe this is where our next major move is going to occur. We've had a very nice rally in bonds, started down at the 28 level, and I wanted to show the similarities that we have here because we are looking at a market that has the potential to rally up to the 382 retracement of the previous high, which would be exactly equal to what we did in February through April of last year. The market rallied from the 139 level up to the 149 level. It rallied 10 points. And here we started at 128, and we could get up to the 138 level, which would be a perfect symmetrical move. In other words, the move from February to March of 2013 would be equal to the one that we have, which would be coming in around November 1st. That's when the timing of this Treasury bond move would be, and it's acting very similar. It's had very little back-offs. In other words, every time it goes up, it sells off 15 points, half a point, and then it will go back and make new highs. And that's the same thing that happened during that February through April time period of 2013. So that's the coming attractions is in the Treasury bonds. We had that major head and shoulders pattern. Interest rates are going higher, folks. It's not a question of if, it's just a question of when. And so we're watching Treasury bonds to rally about 5 more points, and then we're going to be able to, what we think is put on a very good short position that should last, for at least 3 to 4 months. And those are the kind that you really like to get. Because we've had this major grain report today, I spoke to Rich Anderson early this morning, and Rich is going to come on the commodity show this coming Thursday. I apologize for not being on last week's show, but the problem is that everything collapsed here at the Casa because we had an electrical storm of some kind that fried my surge protectors and everything, and I had insurance on everything, so that was great, but it knocked me out of data for 2 full days. I didn't even have the TV, and that's even worse than not having prices. So it was a day to go to the movies, but boy, it was really tough on Thursday. I had no way of getting prices at all other than using the cell phone, because everything electrical was out, and it was very, very tough to get everything finally back up and working when we finally did. So the bonds, the question someone asked me, what if the bonds don't reach that level of 138? Well, we don't know what level it's going to reach, but nobody else does either. All I'm doing is looking at what happened in the past. And last year, we had a really nice rally that lasted 2 months, and this one's could last 2 or 3 months, and that's what I'm looking for. If it matches up, that's perfect symmetry. I don't know diddly squat about the news. This thing about the government, they don't call and ask me what they should do. Thank God they don't, because I probably wouldn't be able to tell them, which is probably equal to what the information they're getting anyway. But they'll get this rectified. When Clinton was in office, we were out for, I think, 3 or 4 weeks where the government was supposedly shut down, but it kept operating. The key parts of it. The other parts, are not operating as much, but some parts of the government still does. But they will get it fixed. The thing that troubles me more than anything else is the amount of debt that we have. We're in the biggest debt bubble in the history of the world, and that does not easily rectified. And history says that it ends very badly. The markets are not telling us that, but that's what history says. That's the main thing. The main thing that we're looking at. So we will see. Someone asked a question about the cycle in the VIX index, and I'm really not sure how that cycle is working right now. All I know is that it was making a bottom when we had those higher bottoms. Even when the market was going up, it couldn't go below the 786 retracement, and that's the reason why I think it had the nice move to the upside. So we'll see if that continues in that direction. We're just we don't know where it's going to go, but no one else does either, as I mentioned several times before. That's the beauty of being a technician, is that you don't really have to know anything. You just watch to see whether prices are going up and down. That's why I started the show showing you the JCPenney chart, because it's a classical pattern. It's perfect. The massive volume that we have is also right in tune with the major bottom, but they're diluting the stock, and maybe that's enough from the fundamental end to make this stock drop for to $4 or $3 or to zero. Remember, stocks that go below $5 usually don't make it. There's a few that did. During 2007 and 2008, we had Bank of America under 5, and I think we had Ford really close to that, and a few others. And, of course, we had General Motors didn't make it, and neither did Chrysler. But and Chrysler's having bigger trouble now because of their acquisition with Fiat. They can't get the unions to agree with anything, which is normal. They don't like to agree on anything either. So these are things that when you're, as a technician, you don't really look at the news. You just wait and react to it. Like the grain report today. I want to see what happens in the next day or so. The report was negative, but just show me the charts, and we'll be able to find a pattern in there somewhere. These patterns repeat all the time, folks. It's not just in the stock market and foreign exchange. They repeat in the commodity markets and bond markets and all the markets, because it's all fear and greed. That's what we're looking at when we're watching these things. Is we're watching the fear and greed that comes into the market. we will cover sugar. I don't want to cover it now because this is not what am I talking about? This is my show. I can certainly cover sugar. We were looking for a really good bottom in sugar, quite a few weeks ago, and of course the market did bottom, and it had. I'll put the daily up because that would show the big move that it had. It's gone way above the price objective that we thought it was going to hit, but we had a beautiful head and shoulders bottom in sugar, just absolutely perfect. It came in at the 786 retracement at 16.20, and now sugar has moved $2,000 a contract. It's almost to the 786 of last year's high, and that comes in at 18.45, and we're trading at around 18.20 in sugar right now. But the pattern is beautiful. It's just a perfect head and shoulders pattern. You could not draw it any more perfectly. The right shoulder to the head is exactly 1.27 expansion, and the left shoulder is a 786 retracement for just a perfect symmetrical head and shoulders pattern, and that's the thing in sugar. After we get to this 1840 level, we'll be watching for a pullback. You'll usually get a nice ABCD pullback in sugar that would allow you to enter without risking very much at all. That would be the ideal situation that you would like to see. I want to spend few minutes here on the New York Stock Exchange Index because we've give me 1 second here. I've got to. Oh dear, this data is. The problem is we are coming to the area of where the. Just give me 1 second. Trying to get an Italian to walk and chew gum is a real problem sometimes. Okay, I wanted to show that we are coming down in the gap area of the New York Stock Exchange Index, which means we should be getting ready to rally because the market's oversold now. We've been down, 10 days now since the high was made right after the FOMC. And so that's usually the maximum amount that you'll get. 8 to 10 days down is usually what you'll get. Now, if it breaks down much lower than that, like we go to 12 or 13 days, then you could be in a major trend change, and we'll have to wait and see. But frankly, the Nasdaq has held up incredibly well through all of this, and it's beginning to look like it was in 2000 when the Nasdaq made a slightly higher high a few months after the Dow Jones did, and then it rolled over. But we will let history tell us if that's going to be the case or not. Someone has a question. Would you add to your position on JCPenney as the price goes down? And the answer to that is emphatically no. Folks, you can do a lot of dumb things in this business of trading, but the dumbest thing that you can possibly do, and I think anybody that's a professional trader will tell you this, and that is adding to a losing position. Just think at what you're doing is you're increasing your risk, 1. 2, you're already wrong in your analysis. I mean, your analysis is wrong because you got a losing position. So you're adding to a loser. That's one of the dumbest things you can do. Of course, not having a stop in is just as bad, but frankly, that's really the number of times that I've been able to do that, and I don't do it anymore, is and it worked. You could count on one of my hands over a period of 50 years. That's how ridiculous it is to add to losing positions. When I lost my first fortune in the crash of 1974, not 1874. We got to take a little break. We'll come back and I'll talk a little bit about averaging down.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I was going to end the show here by putting up a chart of the NASDAQ over the last several weeks. It's a 30-minute chart, and today's low was a 786 retracement of the low we made back on the 17th of September, and so this is basically a 2-week low, but it's a Gartley pattern. We've had a tremendous rally since that bottom came in. It's rallied well over 45 NASDAQ points, and we rallied up to the 786 off of the high. So it's going to be interesting here because with a little more strength, you know, this market could literally go up into new high ground in the next day or so without any trouble at all, especially if there's some type of a meeting of the minds in Washington. So this is the NASDAQ has been incredibly strong. I mean, when you look at the chart, and you know, and I'm bearish, and I look at the New York Stock Exchange Index, and it's bearish, and the Dow and the transportation, the S&P, I see those as bearish. But boy, the NASDAQ, it does not look bearish. I mean, every time it goes down, it comes right back up. I know the big stocks in there move it a lot, but boy, that's enough for me that you have to be really careful shorting the NASDAQ. because it is very, very strong. The way that it came back today was another indication of how strong, the market really is. And so you've got to, take that with a great deal of respect. Remember the price that we were talking about in gold. It's very important that gold hold above 13.23 per ounce. It's just imperative if it's going to be bullish, because if it breaks below that 13.23 an ounce, it's going to be a pretty stiff move to the downside, to the tune of maybe $70 to $100 lower to test the 786 of the major Fibonacci point from $1,177 per ounce. Silver has held up okay, but not, it's not. It didn't show any extra strength. It showed a little less weakness than gold did, which it could be a positive thing. But we've got nothing on the open interest or volume side to help us with the gold. There's not anybody in there accumulating gold or silver, from looking at these particular things that we're watching. So that's the bottom line for the gold and silver. It's etched in stone, in my opinion, that 13, 22 level, must hold, because that's the one that lines everything up, and the cycles have come together at the right time too. So that makes it another situation to look at. Someone asked a question during the break about selling bonds here. I don't see how you can sell bonds here. They backed off a little bit, but they're self-correcting as they go up, and we're looking for bonds to go another 3 to 5 points higher from where they are now. That's where I'd like to sell them. That's at the 382 of the last high, because right now you're in no man's land. There's not a pattern here to sell. There's not a ratio to sell. I mean, that's not where you want to be playing. By the way, if you folks have, like to see the Gartley patterns and you trade a lot of stocks and ETFs, the program that Tom O'Brien and David White have put together on the timing of the charts with the Gartley patterns is just phenomenal. I've looked at it every day now for a few days, and it really picks out some beautiful patterns in the Gartley format, and they're very easy to see. The ratios are there. They're done in color, and they do a terrific job. It's the only program that I've seen that actually does that, and it does it ahead of time. It doesn't do it after the fact. It tells you it's as they're happening. You're the one that has to, pull the trigger, but it does give you the information that you need to trade the Gartley patterns, and I think that is a very important fact for technical analysis. If you can't scan 5,000 charts, this program will do it for you, and you'll come up with some really nice trades. You have to decide which one you're going to trade, but that's it. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.